Automated trading systems have become increasingly popular in the Forex market, allowing traders to take advantage of market opportunities around the clock. This video will guide you through the process of designing and deploying your own professional trading robots. From understanding fundamental and technical analysis to coding your first trading algorithm, we'll cover the key steps involved in creating a robust and profitable automated trading system. You'll learn how to optimize indicators, backtest strategies, and implement robust risk management protocols. Efficiency. Eliminate emotional biases and trade continuously, maximizing profit opportunities. Consistency. Execute trades with mathematical precision, following predefined algorithmic rules. Trade multiple markets simultaneously, expanding your potential for profit. Reduce the risk of human error and make faster, more informed trading decisions. Free up time for other tasks while your robots execute trades on your behalf. Currency pairs. Forex trading involves strategic exchanges between major currencies like US dollar to euro or pound sterling to Japanese yen. Market volatility. Dynamic Forex markets present continuous fluctuations, creating both profitable opportunities and potential risks. Fundamental. Examining economic data, political events, and other macroeconomic factors. Technical. Analyzing price patterns, trends, and indicators to identify buying and selling opportunities. Grid trading. Opening and closing positions at predefined price intervals. Trend following. Identifying and capitalizing on strong upward or downward trends. Arbitrage. Exploiting price discrepancies across different markets or exchanges. Identify recurring patterns and trends in price data. Analyze historical data to validate patterns and their profitability. Refine strategies based on real market data and performance. Choose appropriate indicators based on your chosen strategy. Fine-tune indicator settings to optimize signal accuracy and timeliness. Backtest and validate the impact of different indicator parameters. Simulate. Run your strategy against historical data to assess its performance. Analyze. Evaluate key metrics like profit, loss, win rate, and drawdown. Refine. Adjust parameters and strategy elements based on backtest results. Platform features. Evaluate order execution speed, advanced charting tools, and seamless API integration capabilities. Platform reliability. Select platforms with proven track records, robust infrastructure, and consistent performance. Choose an API that meets your strategy and platform requirements. Learn the API documentation and understand its functionality. Implement the API calls in your trading robot's code. Market data. Receive live price feeds and market updates from the platform. Signal generator. Analyze data and generate buy or sell signals based on your strategy. Order executor. Execute trades based on generated signals and risk management rules. Performance tracker. Monitor and analyze robot performance, providing insights for optimization. Choose a language. Python and C++ are commonly used for Forex trading robots. Structure the code. Organize code into functions and modules for better readability and maintenance. Implement core logic. Develop the signal generation, order execution, and risk management logic. Stop loss. Automatically exit trades when they reach a predefined loss level. Position sizing. Limit the amount of capital risked on each trade to manage overall risk. Risk reward. Ensure that the potential reward outweighs the risk for each trade. API integration. Seamlessly connect trading robot to platforms, API for real-time order placement, and market data retrieval. Order types. Implement diverse order types with automated routing and predefined risk management parameters. Trade reporting. Generate comprehensive reports tracking profits, win or loss ratios, and individual trade analytics. Real-time monitoring. Develop dashboard capabilities with instant alerts for market events and strategy performance. 100% win rate. The percentage of successful trades executed by the robot. 1000% profit. The overall profit generated by the robot over a specified period. 10% drawdown. The maximum percentage loss experienced by the robot during a specific period. Use logging and monitoring tools to track robot behavior and identify issues. Test your robot thoroughly in a simulation environment before live trading. Consult online forums and communities for support and troubleshooting tips. Cloud infrastructure. Use scalable cloud services to handle increasing trading volume and data processing. Multi-robot strategy. Deploy multiple robots with different strategies to diversify risk and increase returns. Market news. Monitor major economic announcements and events that can cause market volatility. Risk parameters. Adjust risk parameters to manage losses during periods of high market volatility. Train models on historical data to identify complex trading patterns. Use AI to predict market trends and adjust robot parameters dynamically. Optimize robot performance by continuously learning from market data. Secure your code and algorithms from unauthorized access or copying. Consider using encryption and obfuscation techniques to protect your IP. Know your customer, KYC. Essential process to verify client identity and ensure legitimate financial interactions. Anti-money laundering, AML. Critical measures designed to detect and prevent suspicious financial transactions. Server performance. Consider factors like server performance, reliability, and security. Provider selection. Select a hosting provider that meets your specific needs and budget. Resource allocation. Ensure your chosen infrastructure provides the necessary resources for your robots to function smoothly. Testing. Thoroughly test your robot in a simulation environment before deployment. Staging. Deploy your robot to a staging environment for final testing and validation. Production. Deploy your robot to a production server to execute trades in the live market. Data acquisition. Automate the process of collecting and processing market data. Signal generation. Automate the process of generating trading signals based on your strategy. Order execution. Automate the process of placing and managing trades on the platform. Performance monitoring. Automate the process of tracking and analyzing robot performance. Monitor market news and economic events that can impact your strategy. Update your robot's code and parameters to adapt to changing market conditions. Continuously evaluate and refine your strategies to maintain profitability. Strategy diversification. Use multiple robots with different strategies to reduce overall risk. Market diversification. Trade on different asset classes, markets, and currency pairs to diversify exposure. Backtesting. Thorough backtesting ensures your strategies are profitable in historical data. Optimization. Continuously refine and optimize your robot's parameters and strategy. Risk management. Implement robust risk management protocols to protect your capital. Stocks. Trade shares of publicly listed companies. Commodities. Trade raw materials like gold, oil, and wheat. Indices. Trade baskets of stocks representing a specific market or sector. Sell trading signals. Provide signals to other traders who want to benefit from your strategy. Managed accounts. Manage trading accounts for clients who seek automated trading solutions. Robot development services. Develop custom trading robots for clients with specific needs and requirements. Automated Forex trading mastery offers a powerful way to unlock the potential of the market. As you delve into this world, remember continuous learning and adaptation are key to success. Start with a solid foundation, optimize your strategies, and you'll be well on your way to achieving consistent profitability in the dynamic world of Forex trading.